Sanjeev Bikhchandani. He is a founder of one of India's oldest internet companies, InfoEdge, which has a job portal, Naukri.com, and they've also invested in a number of tech companies like Zomato as well as Policy Bazaar. Sanjeev Bikhchandani is the co-founder and vice chairman of InfoEdge and now joins us on the show. Sanjeev, great to have you on board on ET Now. Well, you know, the last 2 years have seen a lot of startups emerging as unicorns. I just want to get in your take because 2023 was sure a year of consolidation. Do you think that a lot more groundwork really needs to be done and that we are likely to see that exponential number of unicorns growing?
So look, we have always not been in support of terms such as unicorns and glorifying a unicorn, because we believe that, in the long run, you will be valued of a profit multiple. And we've always said that. And therefore, we've encouraged the startups that we've invested in to focus on sales revenue, collection, cash flow, profitability, margin, all the conventional, commercially prudent business metrics. Now, several are following those principles. As we see Zomato trending well towards profit. We see Policy Bazaar, delivering on numbers and trending towards profit. And that's good. But I think the term unicorn, if it's not based on underlying revenue and profit and margins and collections and cash in the bank, I think the term unicorn, in the absence of those, is past its sell-by date.
And I want to discuss your investments then, Sanjeev. Policy Bazaar, Zomato. They happened way back. These are holdings that you guys have been, keeping in the portfolio for the long haul. Tell us a little bit more about what really stood out. Was it the entrepreneurs? Was it the capital efficiency when it comes to Policy Bazaar and Zomato?
Well, it was not cost efficiency, it was capital efficiency. How well are they using the capital? So in general, great companies are capital efficient. Of course, for a long time, there was an abundance of capital, and therefore it was difficult to be capital efficient, especially if your competition was raising money, which many competitors were raising money, and so you went down the same path. But great entrepreneurs have a sense of being frugal, a sense of doing more with less, and of being capital efficient. Do we see more unicorns coming up? Yes, we do, but perhaps not at the same rate, simply because the valuations are not being bid up the same way that they were 2 or 3 years ago. And this time around, you will find unicorns coming up, which have perhaps sound and solid business metrics. And on the basis of that, they get the valuation.
You know, there is a worrying factor as well, Sanjeev, that it's been a very non-conducive funding environment of late. How worrying is that? And what's the outlook when it comes to regulatory, non-compliance, etc., for Indian startups?
Well, look, I think if a company has got some malfeasance in it, that malfeasance exists whether or not it has money. It's just that when companies run out of money, these things come to the forefront. So if you look at, any company where there is suspected malfeasance, this has often happened when the company was trying to raise its next round at a higher valuation and was unable to. And that's when in diligence things surfaced, right? Exception, of course, being Bharat Pay, where there was a telephone call, the recording of which leaked, and that brought that issue to the forefront and other stuff came out. But otherwise, most companies, when they run out of cash, it's when the problems are noticed and identified and they come out. They always exist, they just didn't come out earlier.
Point taken. Now, you have gone on record as well, Sanjeev, to say that it's a good time to invest in young companies if they are cost efficient and they offer the right valuations. Can you elaborate a little bit more?
So I do think early stage investing, the environment is right now. But I also believe that with there being gaps in late stage investing and growth capital of loss-making startups, essentially companies have to figure out where the next round is going to come from or next round is going to come from, and perhaps not even require that round and get to profit before that, the way it used to be maybe 20, 25 years ago.
You know, we were talking about AI with Rajan Anandan, and I wanted to get in your perspective as well, because Sam Altman has said that AI to a certain extent will kill jobs just like every tech revolution does. What is your outlook on AI and the disruption?
So we are obviously studying it as is everybody else, and we are trying to utilize generative AI in our own organization. And we've got maybe 10 or 15 small projects going on using ChatGPT and generative AI. Thus far, it looks like it's a productivity tool. We have not yet observed or witnessed anybody actually being asked to go because his or her job was replaced by ChatGPT or any other generative AI platform. So we have people in our tech team who are saying, hey, now I have 2 hours a day or 3 hours a day free to do more creative stuff, right? In a sense, this thing is, as of now, according to some people in our team, is perhaps a very good quality intern. And it's a productivity tool, more than somebody who will replace an existing person in our system. But we'll have to wait and see how it evolves.
Like a resourceful intern, I like that. Now, let's also get in a sense as to what your outlook is for investors. Do you think it makes sense to hold on to listed startups?
So, look, we look at the underlying. We look at how the business is actually doing, right? Now, Zomato listed at, it offered in the IPO at about 76 rupees. The share price went up to about 150. I don't recall how much it went up to. That was in the aftermarket. Globally, the market corrected. Indian markets corrected a few months later. Zomato corrected. It went down to somewhere in the early 40s when the lockup expired. It's back up to roughly the IPO offer price right now. I think a couple of days back, as the company performance goes on improving. So at least some of this is global trends. Some of it is is a reduced appetite for public market investors in India to continue to hold loss-making startups. A definite signal to Zomato and Policybazaar, guys, get to profit, which is what they're trying to do, and I think they're succeeding. So some of it is that. I would not worry too much about share price if you're a long-term investor. If the company underlying metrics are good, it'll get back.
And Sanjeev, UPI, it's been exceedingly successful. Do you think ONDC will meet similar success?
Again, ONDC is something which has potential and promise. We are certainly watching it carefully. ONDC is different from UPI because UPI essentially facilitates digital transactions. And the delivery is digital. ONDC, the delivery is physical. It involves physical products, suppliers, vendors. It involves logistics, shipping partners. And therefore, there are many, many more moving parts. But we are hopeful and we are confident that ONDC will have an impact. It'll have a positive impact on the ecosystem. It'll digitize every business and make it financially viable for people to sell online. And we are hoping it works.
There's been a lot of fear as well as anxiety. Do you think that that is absolutely justified, founded when it comes to consumer tech and fintech stocks? Will it settle?
Look, the tech stock correction began in the US. And it was, I think the initial sort of trigger was the Fed tightening, which is, quantitative tightening, contracting size of balance sheet, increasing interest rates. And that caused, I think, money to go out of US equity markets to some extent. That caused a correction. It caused some amount of rebalancing and correction in global markets, in tech companies. And that's what happened to India as well. It also was a bit of a reality check for investors who said, hey, I want to see profit. I want to see an earnings multiple. So it's a bit of both. It's global conditions and liquidity, and followed by a shift in investor priorities, shareholder priorities to profit.
And what are the specific sectors, Sanjeev, that you believe are poised for significant disruption or innovation in the coming years?
So, we don't do it top down, right? We do it bottom up. if we see a quality team doing something interesting and a good idea, we back it. So Zomato, we went in 2010. And if we done a top-down analysis, we would never have said to ourselves, hey, let's do the restaurant listing sector. The sector did not exist. But we met the company, we met Deepika and Pankaj, and we liked what they were doing, we liked the people, and it's worth backing. And we went in there. It turned out to be a sector. Likewise for Policy Bazaar. We met Yashish. We thought the idea was interesting. We thought the team was good. We backed it. There was no sector. It was the first of its kind. Right? It created a category. So when you are going into early stage into companies where a category does not exist today, and these are going to be category creators, you don't do it top down. You do it bottom up.
And you have gone on record to say as well that now you're looking at doing smaller rounds, that you should be less trigger happy. Can you elaborate?
I think when you have too much money, it burns a hole in your pocket. Whether you are an investor or you are a founder, it takes a certain amount of discipline to say, hey, I will only invest small ticket initially. I'll observe the company. If it begins to do well, I'll add more, I'll add more, I'll add more. That's what we did in Zomato and Policy Bazaar both. In Zomato, the first check was 4.5 crores. The second was 13.5 crores. The third was 13.5 crores. The fourth was, I think, 65 crores. Right? And that's how we did it. It worked for us. Likewise, in Policy Bazaar, we invested in stages. I think it's a good idea to invest in stages and observe the company, get comfortable, understand the risks, and invest more. It'll be a higher valuation, that's fine, but at least it'll be lower risk. But for that, you need to be disciplined and patient. So we've been in Zomato now for 13 years, in Policy Bazaar 15 years, we're still there. Early stage investing is a patient game.
There was also the news that InfoEdge wrote off its entire investment in B2P Marketplace business. Can you give us more perspective?
We believe in that company. We think they've got a bright future. It's just that it was an accounting thing where the auditors of the company, in every shareholder agreement, when a VC goes in, and there are 3 or 4 VCs in that company, including us, there's a clause which says that you will, give an exit in X number of years, failing which you can do a company by, a strategic sale, failing which, you can be dragged along. You'll buy the investors back, failing which you can be dragged along and to a third-party sale, right? These are standard clauses. This is called a drag-along clause. It's a waterfall. The interpretation of the auditors of business was that this is not a contingent liability, this is a liability. And because the buyback has to happen in FMV, this is a liability of, I think, 800 plus crores. That was the number, I'm not sure, but it was a large number. Right? The moment it was a liability, our auditors said, which is that, hey, listen, this company does not have the wherewithal to make good this liability, and therefore there must be a write-down. So write-down is technical and accounting in nature. It does not reflect our lack of belief in this company. We believe in this company. We believe it's going to go on to do very good things.
And what's your outlook then when it comes to cryptos?
Well, I don't know if you know, but I have always been skeptical of crypto, and I have said it fairly openly that I don't understand it. Therefore, I don't think we should invest behind it. To my mind, in my batch WhatsApp group, my IM batch WhatsApp group, I've gone so far as to say crypto is a scam. You see, I studied economics in college, and if I go back to what I remember, and this is early 80s, in second year in Delhi University, we had a paper called Money, Banking and Financial Institutions. And, there was a textbook and there was a chapter on uses and functions of money, right? And I failed to understand how a currency can exist in today's world without a sovereign guarantee. there has to be a country behind it. There has to be a central bank behind it. And there has to be a country which is solvent. And there has to be a country which enough people believe in, that this government is solvent, and this government, if it gives a sovereign guarantee, it is worth something, right? And therefore, a currency without a sovereign guarantee, to my mind, cannot sustain. And at least I would not invest behind it. Maybe it can, but I would not invest behind it. Maybe I'm old-fashioned, but I would not invest behind it.
Oh yes, going old school. And what do you believe is the criteria then for investing when it comes to startups?
Well, the first thing we look at is, does this thing solve an unsolved problem? Do customers want it? Will they want it? How solid is the value proposition? Is there evidence of what we call natural traction, which means it's getting used, usage is going up without spending on advertising. Now, both Zomato and Policybazaar, when we first went in, ticked many of these boxes. Zomato was, of course, pre-launch, and Policybazaar was pre-launch and pre-product. But the value prop was immediately obvious to me because I was wowed by it when I got a demo. Zomato was already launched. It was then called Food eBay, and it was very useful, getting used, traffic going up, no advertising. We look at stuff like this as the first sign. Of course, then comes the team. Is the team good? So unsolved problem, natural traction, strong value prop. Is the team good? What's the competitive environment like? And then you go into other stuff, cost profile, margin structure, market structure, all those other things. But these first 2-3 things are very basic.
You've also spoken about for a company to scale in India, it takes half a decade or more. What is your outlook in terms of how a company can really scale and the lessons that you think they should learn before hitting the public markets?
For a while, it looked like it was compressing this time frame. But given the correction in the market, maybe it's gone back there. Having said that, there are a few companies that have done it less. InfoEdge, we did it in 9 years from inception and 6 years from our Series A. We were quick. I think Make My Trip did it in 10 years. I think possibly delivery has done it in less, maybe traction done it in less. I'll have to check. But it takes a long time. The point I was making when I said that is that the time taken from inception, from seed to IPO in India, usually is more than the life of most VC funds. So it's going to be very hard for a VC fund of say 8+2 or 2 years to go in at seed and stay till the IPO. And then 1 year thereafter, after the lock-in is over, only then you can sell this, So therefore, you need very patient capital, or you need to go in slightly later stage, or you need to get outside before the IPO, if you have an 8+2 fund. So I was making that point, actually. Our own fund is 12+2 years for this reason. We need long time horizons.
Are you worried about the slowdown, Sanjeev, when it comes to IT hiring for InfoEdge?
We are taking it quarter by quarter, month on month, and we are seeing how it goes. We are obviously tracking the data on the conversations with all our clients. As of now, it looks like it will stay for a little bit more, but we don't know till how long.
You've gone on record as well to say, Sanjeev, that shuru mein vision nahi, sales target hota hai. If there's only a vision, you lose money. If it's a sales target, then you break even and make money. Tell us a little bit more about that gyan.
Yeah, so take a look at our history. We didn't have venture capital. I quit my job and became an entrepreneur in 1990. We raised venture capital in the year 2000, 10 years ago. We launched Naukri in 97. We bootstrapped Naukri for 3 years. We didn't have money. We were broke. When you're broke, you have a sales target. You may have a vision, but you don't talk about it. You just go out and achieve your sales target. And we had to break even to survive, so we did. Okay? So shuru mein, sales target is more important than vision.
And finally, you've also got the government, which is really building up the startup ecosystem, the digital ecosystem. How have you viewed the progress?
I think this government must be commended for recognizing and understanding the importance of startups and their role in the future economy of India. I quit I graduated from college in the year 1984, and I began to work. I worked for 3 years in an advertising agency, Lintes. I then did business school, then I worked 2 years in consumer marketing in a company that's now called GlaxoSmithKline, then was called HMM. I was in marketing, I was in brands, working on Horlicks. Now, if I go back to the first 2, 3, 5 years of my career, it was a completely different business landscape and environment in India from what it is today, right? And if I look at what are the sectors and companies that have got growth, buzz, investment, provided jobs, very many of them did not even exist in 1984 or barely existed. Forget about companies, even sectors that did not exist. IT services barely existed. 1984, Infosys and HCL were startups. They're giant companies today. IT-enabled services did not exist. The internet did not exist. Mobile telephony did not exist. Mobile apps did not exist. Organized retail did not exist. Private sector insurance did not exist. Private sector banks barely existed. Private sector airlines did not exist. You name it. Sector after sector did not exist. And essentially, change that has been brought about due to new sectors, new companies, very often first-generation startups. So the startups of today are giant companies of tomorrow. And if you don't encourage startups, then you don't have a conducive environment, whether in terms of regulatory or in terms of capital availability, and enough entrepreneurs, of course, trying, right? You will perhaps have a stunted future. And this government recognized that, and therefore Startup India, therefore Fund of Funds, all of this very, very good. Plus what the government has done in UPI is quite amazing. What the government is doing in the health stack, quite amazing. What the government is trying to do through OnDC, very, very good.
Okay, it's a pleasure interacting with you. Thank you so much for taking time out. And to all of our viewers, thanks so much for watching. Here's hoping that you continue to remain faithful to ET Now and continue for the next many years of our journey.